Tesla recently announced a stock split might be in the works. The electric vehicle brand made headlines after announcing that it would seek approval for a stock split later this year. Is it time to make a purchase? Tesla's stock price has risen since the announcement in late March, despite the fact that the proposed split is still in the early stages and little information about it is available. Experts say it's almost impossible to predict whether the forthcoming stock split will produce similar results as the last stock split back in 2020. When is the right time to invest in Tesla when you've been on the fence about it? Should you invest before or after the split? Keep watching to find out. A stock split occurs when a corporation splits its shares into smaller prices, lowering the price. Since Tesla stock now costs about $1,000 per share and the business opts for a 2-for-1 stock split, for example, twice as many shares will be available at half the price, or $500 per share. Experts say stock splits don't change much about the stock. The market worth of the corporation remains unchanged. Those who already own the stock will receive more shares as a result of the split, but the stock's overall value will remain the same. However, they might make pricey stocks more appealing to investors on a tight budget. For many investors, paying $1,000 for a single share of stock is unattainable. However, if the price decreases to $200 per share after a stock split, it may be more affordable to the typical investor. So what difference does the timing make? When it comes to the stock's actual worth, whether you buy it now or wait till after the split makes little difference. Stock splits don't affect the firm's valuation, so investing at a lower price doesn't necessarily mean you're getting a better deal. You simply control a smaller portion of the company. A stock split is basically a method of dividing existing shares into smaller pieces to make them more accessible. As a result, the total number of shares outstanding increases while the stock price decreases. This can be compared to cutting a freshly baked pizza into slices. Dividing the pizza into pieces doesn't change anything, but it does make it easier to share and eat. While a split would make Tesla more accessible to more investors and expand the company's audience and reach, what does it mean for investors who want to buy the stock before the split? The upside of investing now is that you'll profit if the stock's price rises as a result of the split, as it did in 2020. However, stock splits can occasionally rekindle investor interest in a company. If this happens, investing now before the split might result in significant rewards. However, it's anyone's estimate whether Tesla's price will rise as a result of the split. Nobody knows when this possible stock split will take place since the economic climate has changed since the last stock split in 2020. As a result, it's difficult to predict how the split will affect Tesla's stock price. Though the idea is unlikely to face much opposition, the firm will need shareholder approval before it can pay share dividends to facilitate the split. The news of the split came just days after Amazon and Google both announced stock splits. Amazon and Google will split their shares 20-1, each on June 3rd and July 1st, respectively. GameStop is now following suit. Even though we have no idea what Tesla's split ratio will be or when it will happen, if history is any guide, it might happen soon. Tesla's stock split for the second time in 2 years is actually a rare occurrence. Microsoft's series of tiny splits in the 90s and Amazon's 3 splits in 1998 and 1999 may be the most comparable examples. However, as compared to Tesla's previous split, those series had lower split percentages. Like many investors, you may wonder why Tesla is splitting their stock. Well, a stock split can be implemented for a variety of strategic reasons. Most of the time, a company anticipates significant growth and wants to keep shares at a reasonable price for ordinary investors. Employees who receive stock-based remuneration, such as those at Tesla, will also have easier access to the shares. Other strategic examples may also exist. For example, the Dow Jones Industrial Average, or Dow, is a well-known price-weighted stock index. Because the stock price directly impacts index weighting, it's a component that's examined for inclusion in the Dow. Companies with high share prices may be deemed not worth investing in. Overall, there seems to be a pattern. According to Reuters, research from Bank of America indicates that companies that split their stock do around 16% better than other companies in the 12 months following the split. However, there could be an indirect relationship with the company's growth and other circumstances playing a role in part or entirely. Splitting the stock indicates that the company is growing and confident. Those who trade stocks and options, on the other hand, frequently take advantage of the split atmosphere for trading, which can result in a lot of volatility in the markets before and after the split. Tesla and its shareholders will have to undergo a few extra procedures for this stock split compared to the last time. when the board merely announced its decision on August 11, 2020, and the stock was quickly split on August 31, 2020. The Securities and Exchange Commission, or SEC, sets a limit on how many shares a public company can have in circulation. After the last split and public offering in December 2020, Tesla is nearing its maximum and can only issue a 2-to-1 stock split without shareholder approval under present rules. This indicates that Tesla will announce a larger multiplier. Following that, the board of directors will vote to approve a stock split, which will almost certainly be announced soon after. In addition, the stockholders will receive a share dividend to complete the split. For example, if the split is again 5-to-1, you'll receive 4 additional shares on the day of the split for each share you own by the cutoff date. So what effect do stock splits have on options? If options expire after the day of the split, they're affected in the same way as shares are. If you have a $1,000 strike call and a 5-to-1 split is declared, you'll receive 5 $200 strike calls. This circumstance gives you more options when deciding whether to exercise or sell. Although Tesla's recent stock split intentions are causing a lot of excitement among investors, Charlene Reinhardt, CPA, told Go Banking Rates that the move is merely a cosmetic alteration that won't make your account fatter. As we mentioned earlier, it is preferable for investors to focus on the core business. She advised that if you want a chance at long-term success, pay attention to measures like revenue potential, production capacity, and growth in car deliveries. The Motley Fool also suggests adding Tesla to your portfolio only if you believe the company's core business can maintain its high-performance streak after studying the company's financials and aspirations. According to experts, if Tesla continues to impress investors, it could provide you with the portfolio gains you've been searching for, and that's even more appealing than a stock split announcement. In summary, Tesla will simply slice the same ownership pie into many smaller pieces. The total will remain the same, and each of your present Tesla shares will still be worth the same. Let's go back in time once more. In the summer of 2020, when the corporation split for the first time and only time, stock prices soared between the announcement and the ultimate 5-for-1 split at the end of August. After that, investors realized that the split had made no difference, and some of Tesla's inflated market value began to leak back out. Now, Tesla was crushing the market prior to the 2020 split, and it quickly resumed its fantastic performance following that minor chart squiggle. In the short run, the market is frequently a popularity contest, but in the long run, it's an effective weighing machine. That's why the stock has increased over 1,800% in the last 5 years. The stock split 2 years ago was a minor footnote in the broad scheme of things. As a Tesla shareholder, you should be concerned with vehicle deliveries, revenue growth, and free cash flow. The specifics of how many shares you can buy for $1,100 are less important now that most stockbrokers allow us to buy fractions of a share in high-priced tickers like Tesla. After all, the company's financial statements are all about the Benjamins. From that standpoint, Tesla is a wonderful investment now, with or without the anticipated stock split. What do you think of Tesla's intention to split its stock? Comment down below.